Hello, everybody. Welcome back to the jam session, the All-Star Options jam session. Today is Thursday, June 27, 2024. I hope everybody's doing well. I hope everybody's had a good week. Is the bull market back? I don't know. The big caps seem to be saying that that's the case. We shall see. But hey, before we get into anything here, let's drop the old disclaimer. Everything we discuss here is for educational purposes. I'm showing you what I'm doing with my money. I hope that you learn something along the way. And if you're a first timer here, what we do here at All Star Options is we review some of the trades we have on. We have a whole bunch of trades on. We don't review every trade every week, but we talk about the trades where something has happened, right? Either we've gotten out at a profit, we've taken a loss and we've gotten out of the trade. Maybe we've made an adjustment to a trade. Maybe we've got a trade that's approaching options expiration. So we review those trades. We update some stops on existing positions, on positions that need stops to be updated. And then we do a quick little rundown of new trades that we've put on in All-Star Options since the last time we spoke. All right, so let's go right to the charts here. Let's talk high level. And by the way, guys, at any point, if you have any questions in the chat section there on YouTube, please use it. Type in your questions. I will see it. I will do my best to answer it if it's relevant to what we're talking about here. So don't be bashful. No question's a dumb question. All right. So we're looking at VIX right now, starting the discussion off with the VIX. VIX isn't really telling us anything. And this has kind of been a broken record. I think I've said this the last 3 or 4 weeks. VIX trading with a 12 handle near the lowest levels it's been for all year. So that's really not giving us much of a signal. There's not a whole lot of fear in the market. Nobody is expecting or pricing in any kind of big move in either direction. So VIX is just telling us that we're a little bit complacent, perhaps. If we bring up the S&P 500, we will see that, yeah, look, we broke out last week. We're holding those gains. It looks like we want to go higher. Let's put up the Qs. Same story. Had a breakout early last week. We tested it a little bit, but the gains are holding. It feels like the next leg of the bull market is really taking hold, especially when you look at the big cap names like Amazon, Microsoft, Google. They're all going higher. That usually portends well to an index breakout. All right, so let's discuss positions where we've had to take some action. Let's start at the top just to close the book on our C limited trade. I think we've talked about it every week over the past few weeks, and rightly so. It came into options expiration on Friday last week, and guess what? We exited our position on expiration day. That doesn't happen very often, but when it does, that usually means good things happen. It means we're sitting on a winner. And C Limited was a great winner for us. For those who don't know, we got into a risk reversal back in February where we sold the June 35 puts and bought the 65 calls. We took a credit when we put that trade on. When we had a nice big run up over here back in early May, we sold half of our calls for 640 and covered all of our puts. So now we're sitting on a whole lot of credit, and we still had half of our call position on, and we held it all the way to expiration day. We got out at 10:45 on Friday, $10.45. So a fantastic trade all around. If you average, just doing quick and dirty math here, but if you average the two sell prices for the calls, the 640 and the 1045, what's that, about 840, right? So we had a 50-cent credit when we got in, and then we sold the whole thing for about 850, let's call it 840. What a great trade, right? One of the better trades of the year, but we are now out of C limited. We had to be out. Our options were expiring. So that's the good news. The rest of the stuff, we just have some small losers to talk about, which is par for the course for what we do here. We have lots of small losers, but then occasionally we have a trade like C limited that pays for all of them and more. That's the game we're playing. So in no particular order, let's talk about our unintended pairs trade in the fashion apparel shoe section of the world, right? The makers of what are those? The Cloud sneakers. I forget what the sneakers are called, but very fashionable sneaker that people are buying these days. I don't own a pair, but everybody's talking about them. We were long some October 50 calls. We got in right about here, June 5th. It was going our way for about 3 days, 4 days, and then it just rolled over on us. and we closed these late last week, late last week for 86 cents. That sucked, right? We paid $2, got out for 86 cents. But as I always say, whenever I buy long calls, I size my position knowing full well that there's a very real possibility that those could become a zero and I have no chance to get out, right? So anytime I get out for less than a zero, it's not a win, but it's the kind of loss I like. So we bought them for 2, we're out for 86 cents. No bueno. But the funny thing is that we were long on a shoe company, and then we were short Nike, also a shoe company. And guess what? Neither of them worked. Sometimes that's just our luck. Although maybe we got out a little too early in Nike. As you can see here, we bought a put spread. We bought the July 90 puts and sold the 80 puts against it, creating a bear put spread. We paid $260 for it back on May 29th. Unfortunately, our stop was 97, and we had to close above 97 on June 24th. According to our plan, that's our signal to get out. And we got out at the open the next day, of course. Hindsight's 2020, but soon after we got out of our position, the stock went right back down the way we wanted it to. Did we know that's going to happen? Of course not. If we knew, maybe we would have held it, but I don't have a crystal ball, or at least the one I had doesn't work so well. Maybe yours is great. Yeah, I'm feeling pretty crappy that I got kicked out of this trade, because now it's kind of back in the wheelhouse. And really, we were just waiting for a catalyst. It's got earnings coming up next week, and we were hoping that the earnings catalyst, would be what would send this trade into profits for us. But listen, rules are rules. Risk management is job number one, and we did not like this trade above 97. And for a brief moment in time, unfortunately for us, it closed above 97 and it was trading above 97. And we had to get out. So we're out of Nike. So we lost on our short shoe trade and we lost on our long shoe trade. Sometimes that's the way the shoe falls. Nice pun, huh? All right. Last one to talk about is Coinbase. Crypto, it's no secret, Bitcoin's rolled over a little bit. Some good news in Solana today for people who like to trade Solana. But as far as Coinbase goes, which is not a pure play. Oh, it is a pure play. Excuse me. It's a pure play on crypto trading in general. With the recent sell-off in cryptos we've seen over the last few weeks, Coinbase was not immune, right? We bought a long October bull call spread that we bought the 300 calls and sold the 350 calls back on June 3rd or June 4th. It looked good for about 4 days. And then it rolled over and we had to get out at 540. Our stop was 218. We saw a close below 218. That's our signal to get out. So we paid $9.55 on the way in, got out for 540. Again, not 100% loss, which is what I factor in when I size these positions. So getting out of 540, not the end of the world. All right, so that's it for trades that we've exited this week. Not too much to talk about. And additionally, there's not too much to talk about our updated stops. We only have 2 stops to update this week. Let's start with Microsoft. This is a bull call spread that we're in. We got into a couple weeks ago. June 14th, I believe, was the date. We bought a January, so we have 6 months to go. January bull call spread. We bought the 475 calls, sold the 525 calls against it. We paid $14 to get in. So far, the trade's working very well for us. And I moved my stop. Our original stop was at 420 when we got in. I'm moving my stop up now to 430. That corresponds roughly with these prior resistance levels that go back to early March or mid-March. If we're back below 430, that's a pretty strong signal to me that this could be a failed breakout. So 430 is my line in the sand. Any close below 430 now in Microsoft tells me time to get out, protect what we have left in the position. Hopefully, this Microsoft, like all the big caps, is just getting started. Meanwhile, our short position, Bill Holdings, we're long a September 50-40 put spread, meaning we're long the 50 puts and we're short the 40 puts. We paid $360 for it back on, I believe that was May 31st. I'm lowering my stop. This is a short position, right? This position benefits from the stock going lower. And so I'm moving my stop down now to 53.50. You can see we got in right here on May 31st, and this level here on June 12th, this kind of said to me that that's a pretty significant level right there, the way it reacted off that high. So we're leaving that level in now as the level to watch. If we break above 53.50, that tells me that this is a fake breakdown and this thing has designs on going higher. And look, short trades, if anyone's a swing, I mean, if you're with us, if you're trading the way we trade, then you are a swing trader. And in my experience, swing trades on the short side, you have to be a little bit more like a tighter leash with them, because short positions, when stocks go down, they typically go down a lot faster than a stock goes up. Stocks, when they're going up, generally, there's always exceptions, of course. This is not a ironclad rule, but generally speaking, stocks that are in uptrends tend to kind of go in a nice smooth ride up and down, generally speaking. Whereas when stocks are selling off, they tend to take the elevator down. They go quickly. But what happens is when they go down quickly, they're very likely to bounce just as fast, if not faster. So with short positions, you got to be a little bit more quicker to take your profits if you have a plan to take profits. And you have to be mindful of when you get those bounces, that could be it. And they could be vicious. Bear market bounces are some of the most vicious moves traders experience on a, on a swing trade time frame. And when I say swing trade time frame, I mean trades that you're planning to hold for, a couple of weeks to 3 or 4 or 5 months, right? Those types of trades, bear market bounces can be a bitch. How's that? All right. So that little riff sets the table for why we're setting that stop at 53.50. We don't want to see Bill get above 53.50. That's it. All right. Let's see if I'm just reviewing the questions here. I see Kirk asks, on ETF trades, do you still follow the same trading style that you post on All-Star Options, or feel differently, maybe go longer since moves are slower, anything like that? I think what you're asking is, with ETFs, do I have a longer time frame with ETFs? I mean, I don't generally do a lot of directional bets with ETFs. Certainly not in my own trading, and definitely not in All-Star Options. And the reason why is because, generally speaking, I'm looking for alpha, right? And if there's an ETF that is, let's say there's an ETF that's bullish, right? We love the trend. Maybe the ETF is breaking out. I'm just picking a random one. Let's say the finance ETF, right? What's that? XLF. If XLF is breaking out, my thought process isn't, oh, I should go buy XLF. My thought process is, ooh, I should look into the banks and see if there's some good setups in the banks, because banks as a sector are working. And then I'll go through the list and look at some of the, the highest relative strength names and find an opportunity that way. And then I will play it that way. I would rather be in, like a JP Morgan or Goldman Sachs or Citibank if the financials are breaking out, rather than using an ETF to express a bet. Now, that's not to say I don't do that. I have made directional bets with ETFs before, and I will do it again. But generally speaking, I'm looking to get exposure via individual stocks. Okay, I think that's it. Projected enable says, bear market bounces really can be face rippers. I remember from just a couple short years ago. Yeah, you're right. Bear market bounces can be rippers. All right. We got that out of the way. Let's just review some of the new trades we've put on since we last spoke. We've got 3 new trades. And for those of you who are new here, or maybe are not members of All-Star Options, if you want details on every one of these trades, we publish detailed trading plans for every new trade that we put on. Tells you why we like the setup, what about the setup we like, what option strategy we're going to use to express our thesis, where we manage risk, where we take profits, if we're taking profits at all. We lay all those details out, pretty detailed, I think, in the blog posts. And for every one of these trades we're going to discuss, you could find those details at allstarcharts.com. Go to the members section, go to the options section. You will find those posts, all the details about those trades there. So let's just go right down the list in no particular order. GE, we put a bullish bet on in GE last Friday. So far, it's not doing a whole lot. But for those of you who are in this trade or saw the details about it, we've kind of created the trade in such a way that we can be paid to wait it out, right? We might be early on this GE aerospace trade. We may not be, but if we are early, and right now the market's telling us that we may be a little bit early, we've got a strategy to kind of help take the sting out of the weight. All right. Again, details at allstarcharts.com. Next trade, DHI. That's DR Horton. A bullish trade we're putting on here. We're betting on this 140 level holding, and boy, is it testing us, right? I mean, we've flirted below 140 on 3 separate times since we got into this trade, but it hasn't closed below 140, which is the most important thing for me. Maybe our stop at 140 was a little tight. Maybe in hindsight, I'll think that maybe I should have had a stop at 139 or 138. I don't know, but that's where we're at. But we're long DHI. Moving on to Amazon. Amazon, we got into this one yesterday. Amazon's tricky for those of you who maybe got the details late. And look, I have no control what the market does after we publish our posts, but this Amazon really started ripping pretty quickly. Within 30 minutes after we posted the trade up. So I know I heard from some of you that you weren't able to get in at a price anywhere near that I got in, and I'm sorry. I have no control over what the market does. I think you could be patient with this one. I think we might get an opportunity to get back in at or near the prices we got in. I mean, look, I hope not. If I'm being completely selfish here, I'm hoping that this thing does not look back and rips from here. Why? And we've talked about this in the past, but if you go back and review all of your biggest winning trades, and hopefully you have a few, I'm sure you've got at least one. If you've been doing this for any length of time, you've got at least one big trade. Most of us have a few. We all have a lot of small losers, I hope, right? A lot of small losers are the cost of doing business in this game. But if you go back and look at your biggest winners, the trades that you just really crushed it, whether it's a high percentage win or whatever, one thing you'll find in common in most of those trades, not every trade, right? Every trade's different, but one thing that's very common in the biggest winners is that they tend to take off almost right away. Like as soon as you get into it, within a day or two, again, we're swing traders. We're not intraday traders, but as a swing trader, when you get into these trades, within a few days, maybe a week at most, they really start to take off right away and you never faced any heat. Those are the trades that tend to become the biggest winners. They're also the hardest ones to hold, right? Because when you get into a trade that just starts ripping right away and you're feeling great, if you're like me, you start thinking, oh man, I just made a lot of money really fast. I should take some off the table here. This thing can roll over on me. It's happened a million times. I've seen it roll over on me a million times. I can't let this one do that to me too. I need to take that profit. And a lot of us, myself included, are very tempted to take profits. And look, I'm not going to tell you that you're a bad person or a bad trader if you do take some profits in a quick gain. But I promise you, if you make that a habit of doing that, you're going to miss out on the mother of all trends, the one trade that's going to make your year. I don't know which trade that is. I don't know when it's going to happen. It might be Amazon. It might not be. So far, it looks like it was that C Limited trade. But you never know which trade is going to be the biggest winner that makes your month, makes your year, maybe even makes your career. And if you're taking profits too early because you made a quick gain, then you're never going to know. You're never going to experience that huge win. So something to think about. And I'm not saying it's easy. It's the hardest thing a trader can do. Okay. Taking losses is easy as long as you have a plan for that, right? And especially with a lot of the options trades we put on, we have defined risk. Not in every trade, but in most trades, we use defined risk. So we already know the most we can lose, right? And if we're doing it right, we're sizing our positions in a way that when we lose, it's no big deal. We lose 1% of our portfolio, 2% at most, hopefully, right? You got to have those big wins. And I know it's so hard. It's the hardest thing to do. Every profitable trader that I've known, every guy who's had crazy success in this business, every woman who's had crazy success in this business that I've come across, they will all tell you uniformly that when you get a big winner, and that's what everybody wants a big winner, but those are the hardest trades to hold. All right. So if you missed this Amazon, I'm sorry. There's other ways to play it. You don't have to play it exactly the way we did. There are other ways to play it. In fact, in our chat room in the ASO chat, there are people in there talking about other ways that they've played it so they can participate too. Great. By the way, if you're an All-Star Options member and you're not in our live chat room every day, what are you doing? Are you even here? Get in there. Shoot us an email, info@allstarcharts.com. We'll get you hooked up. You should be in there. We're discussing trades all the time. All right. And you can ask questions of myself. You can ask questions of everyone else. It's a great community. It's getting better every week. So please make yourself available in there. All right. Last thing, we'll just I want to put this slide up as I promised everybody that I just kind of review the stops. If you want to take a screenshot of that, there's only two to remember here, but our bullish trade in Microsoft, we moved our stop up. Our bearish trade in Bill.com, we moved our stop down. So there you go. And finally, like I said, if you have any questions at all, info@allstarcharts.com. And also, I have to mention, if you like the charts I've been sharing in these jam sessions, my friends at TrendSpider, that's who those charts are, trendspider.com. They're offering you, the viewers of my show, 50% off some subscription plans at TrendSpider. So if you want to try it out, use that promo code. Go to trendspider.com and use that promo code Sean50 and get 50% off a subscription plan at TrendSpider. I've been using the charts now for several months now. I love them. They're great. They do exactly what I need them to do. Give them a try. All right, folks, that's all I got for you. Have a great weekend. We're not going to have a jam session next Thursday because it's July 4th, and I'll be in Las Vegas going to the Sphere to see the Dead and Company. Can't wait. But we'll try to do a show on Wednesday. I got to talk with my team in the studio, make sure we can find a slot for Wednesday. We'll figure something out, but definitely not Thursday. The markets are closed on Thursday. Enjoy the fireworks. Enjoy your weekend this weekend. Enjoy your next weekend, your weekend next weekend. It's summertime, baby. Enjoy it. All right. We'll talk soon. Take care, everybody.